Hello, everyone. Happy Tuesday morning. How is everyone doing today? Good morning, John. First in. Congratulations. Yes, thank you for putting in all the earnings. If you're interested, scroll through the chat. Sterling's helping out. Thank you so much. Good morning, Sterling. All right. I don't see the consumers broadly healthy. I see the upper end is doing still fine, but the mid to bottom, they are not. Good morning, but I don't know what city's looking at. Good morning, Patrick. What else do we have? Yes, the economy is slowing. U.S. retail inventories ex auto advanced actual 0.1%, forecast 0.5. Thanks you for putting those in. You can see them over here behind me. You can see all those wholesale inventories, the ex auto right there. What are my red book numbers? Where are my red book numbers? There they are, 5.6. So a little bounce back in red book. Little bounce back in red book. Case show or home price month over month coming dropping 0.3. Year over year still up, and this is the median home price. It's the high end still selling. Like around here, Paradise Valley, which your average home price is about 3 million. People are still actually, prices are still going up there, but the rest of a lot of the other areas are not. They're dropping. They're finally starting to drop, I should say. What else do we have? Thank you for putting in that. Where are we going here? All right. All right. Let's see what else is here. Let's see. Dollar likely to rise if Trump becomes president. Well, the dollar's been rising. Also, yields are going up. And Trump is not deflationary or disinflationary. Let me put it that way. Can we deal with another? Yet he wants the role of Fed banker. What is he going to do? Cut interest rates and then really stir it? Just saying. You can't have it both ways. We actually, Powell really screwed up with that 50 basis point. Even though we're slowing down, we're definitely going into a recession. There should not have been a 50 basis point cut right before an election. Uh, You got stuff like PayPal, which was a beat miss. Also, pay them like McDonald's, which is a beat. McDonald's will probably be a miss next quarter. But a lot of these earnings have been and revenue forecasts have been really dumbed down. They've been really moved down. So if you're not beating, it's like lowering the bar and then jumping over a lower bar. Keep that in mind too. So if you're looking at stuff, don't just look at the beat or beat miss or like look where the bar was lowered to, and then what the results were. Good morning, Andrea. Thank you for tuning in. Pfizer beat. What else? Is there anything? Oh, there's the most important one. Crocs. People are still buying plastic shoes. That's good. This is interesting though. D.R. Horton, home builder. Miss, and guiding down. There should tell you something about what's probably coming with housing. Good morning, Ted. What was this? A new Ted? What's with the new little icon? The new little, I don't know, what do you call those things? Your new little icon. I'll call it an icon. Hello, Charles. The clocks went. Oh, you changed already. Where are you again, Charles? Remind me. We're backwards, and we don't change. Now the rest of the country changes coming up this weekend. I don't change. I will have to change the time of the live stream because everybody else changes. Good morning, Royal Palms. But that means my live stream is not at 6 a.m., it's at 7 a.m. So theoretically, I can sleep in a little longer. Good morning, Jacob. First world problems we have here. Uh, uh, Corning, GLW Corning, beat, miss. Guides up, though. Guides up. Well, thank you so much for everyone for tuning in. Let's get to the real heart of the markets today. Rainy old England. It is old England, and it does rain a lot there. It does. It does. Do you mind sharing like what city you're in? That would be interesting. I'm always so curious. My sister lived in London for years. She actually visited this weekend. She flew in Saturday, flew out Sunday on the red eye, but I got to see her for one day. I haven't seen her in 5 years. She's down in New York. So, what else do we have coming out? We have where we have the jolts. Pay attention to this: the job openings and job quits. You could get a little minor volatility around here, and consumer confidence coming out at 10 a.m. Eastern. You got the Dallas Fed Services and Revenues Index coming out at 10:30 Eastern, and then it's pretty quiet. Yesterday we had some sort of touchy auctions go off in bills and notes. The market so far, sort of mixed. I should say very mixed this morning. Mega caps definitely mixed. Things relating to consumer spending are mixed. McDonald's, which was their beat beat, but still down. And remember, they're still going through their food food contamination issue. What else do we have? We have the groups. We have the groups. Comm services leading, but look at this: utilities and industrials really lagging today. Still a quarter point cut in 9 days. Fear and greed still in greed mode. Schiller PE still 37.10. That should tell you so. Also, with these earnings coming in where they are, this, even if the market holds up, this has been climbing because it's not great earnings. Even though there's lots of beats, they've been dumbed down. London Town. Okay, Charles. Well, sorry you missed yesterday, but thank you for tuning in. Hey, Richard. And can we just? Do you think England should get rid of this silly time change stuff too? I mean, is that the same? Because I know most Americans say just get rid of it. What are the thoughts overseas on getting rid of the time changes? Do we still need it? All right, Sterling put in. We had PayPal, SoFi, McDonald's. Sterling already covered that. After the close, though, we got AMD. We really kick off tech earnings with AMD, Alphabet, Snap. Also, pay attention to Visa. And there you go, Chipotle. Overvalued burrito bowls. So we got some really significant earnings after the close. All right, are we going to get beats like from Alphabet and AMD to propel this market short-term temporarily higher? Or is this going to start the rollover? Because so far we have the sideways correction. You can see here, let me zoom in. This is a sideways correction. Look at it on the weekly. I mean, if we take a look here, great example. So we closed roughly where we're trading now 1, 2, 3 weeks ago. Where we're closing is roughly where we're trading now. Even where we opened 3 weeks ago, if we continue to sell off around last week's low, we'd still be trading around where we opened 3 weeks ago. So this is a textbook example of a sideways correction. Now, yesterday, inside bar. So I'm really paying attention to Friday's highs and lows. Prior to that, if we bounce up, we were still getting selling pressure around about this 58.80 and above. It can't sustain anything. Key support, we've already broken yesterday's lows, so that's where I'm paying attention to Friday's lows. We're trading against a little cluster right now, this 58.50, but then if we start trading down intraday, 58.35, then I'm looking about 58.25 are key support levels. Still pay attention to Wednesday the 23rd's low. Okay, that's also at the 62.5 harmonic. So if we trade down here, not necessarily today, but if we have some misses with some key earnings and trade down there, 5,800 is your key line in the sand for a bigger pullback sell-off. And my magnet price, not just because of the 62.5 rule and that 87.5 with 57.50, you have the 50 exponential going in there, and you also look at all this big support shelf right here. So that's key on any sell-off. That is very, very key. With this extended little, we got some decent pausing bars up here now. So I gotta just update all our levels to where we have a pausing bar, because if, let's say, AMD and Alphabet blow it out, I'm really curious mostly on Visa actually to see how because spending is going, and this is rearward rearward looking, but it would be interesting. Now, if we do break out again, your major is about 5,900, 5,880 to 5,900 is been selling pressure. Above 5,900, your magnet area, your very key magnet area is 59.78 to 59.94 on a breakout to new highs. Since you're tied to the U.S. market, get rid of it. I agree, get rid of it. Get rid of it. Even though we don't change time, get rid of it. We don't need it. The NASDAQ. The NASDAQ. Right now, your little short-term harmonics. The little key area to watch for is about 20,140 on any sell-off and a close below there, because then we could come down and really tackle the where we had the buying pressure before at the beginning of October. Oh, I think I'm going to be on Ninja Trader this on Halloween on Thursday, in case anybody wants to add that to their schedule. Let's get that right. Sorry, it's 20,150 is the key level to watch. 20,150 on a breakout move. Let's update these with the most recent harmonic pausing area. So on a breakout, we'd be looking at a 20,929 to the all-time highs in the future markets, 29,083. We do break above that if we have massive beats with earnings. Remember, that's not just for today because we still have things like Apple coming up. We have 21,437 is the next key target. So there you go. There you go. The Dow, we got a one-day rally pausing bar after a multi-day decline. So, however, if we do sell below Friday's lows, which is I'm paying very close attention to Friday's lows, because every time we're dipping below that prior, we had some buying pressure. You see all the buying pressure over here. But if we do break down, 42,100 is very key with the 50 EMA. Rally, we're looking at the crossing of the rotation zone, which would be the first cross downwards again since back in August. So, which would start leading to a potentially bigger pullback in the Dow. We don't trade that, we just keep notes of it because the rotation zone would be against our price action now. So, the very key resistance is 42,700. The Russell getting back between the 50 and the 62.5. And now reversing down. So in this potentially toppy area, the only thing short term that makes me bullish on the Russell is back above 22.72. Other than that, we'll be watching today 22.31 area. VIX climbing, also heading into with some volatility with earnings, and we're getting close to that election. Election day next Tuesday. The DAX, by the way, the mini double, the little mini double is off the table now. The bigger double you need, it's getting into a triple top territory. I'm pulling it. It didn't technically correct far enough to do it. We'll keep it on here a bit longer, but it's getting very lopsided. Now, it's not beyond the rule I covered last week, where you count the bars, but it is getting lopsided in triple area. We'll keep it on there a little longer. Notes, look at this. The note route, we're back at the 62.5 harmonic. This is very, very significant. So watch where it closes today in relation to about 110.10. Because that could be on any rallies. And you see our last little pop rally was the rotation zone. We had a sideways correction and then the sell-off continues. This might not resolve till after the election. But on any pops, I'll be watching for potential rollover plays unless something shifts with the election and we get a massive upside bar in the notes. Yields, almost 4.3% on the 10-year. Last time we were trading here, back in July. And now we're entering a massive consolidation area up here. Pay attention to if the nose closed above 4.308. That would technically shift the rules to continued pressure on the yields and mortgage rates back over 7%. Hey, Royal Palms, thanks. What do you mean, what's wrong with gold? Nothing's wrong with gold. What do you mean, what's wrong with gold? You got to be a little more specific, Dark Screen. You're very welcome. It's my pleasure. It's my pleasure. I hope one thing I say or do can help somebody. Whatever your time frame, whatever your trading stuff is, I hope there's one little thing I can do to help. This is interesting. 10-2s. Little correction. Is this back into the weekly rotation zone and rotating back up? Remember, this is, if this starts accelerating, it's not good for the markets, and also yields rising aren't good for the stock market because they're exceeding dividend rates. Everything's now is capital appreciation, but we're at super pricey markets. And so these yields are starting to get attractive again on the longer term yields. Dollar index. Now this is a triple on the 4 hour. You see this? And trying to break higher. We're just pulling this off. It's a triple now on the 4 hour. Again, we've closed above that 62.5. So we could continue to see. Look at the end of June magnet prices in the dollar. And a very significant declining trend line. This is actually a best fit line. Very significant. So we could easily, over the next little bit, see continued upward pressure in this massive channel in the US dollar still climbing. Crude still holding in there against key support. Is there any great setup though? We do. And remember, these are against the rotation zones. This does qualify for a little mini double that's confirmed, but not triggered. So if you're looking for something in crude, it's confirmed, but it would have to follow through with a 4 hour close back above 68.20. It's not got there yet. If this rotates back down, okay, if this rotates back down below 67.24 on an intraday basis or closes below 67.40 on a 4 hour basis, that is off the table. And I'm not expecting it to trigger. It is against your 4 hour rotation zone, and it would be popping in the key resistance. But it is confirmed but not triggered. Crude, I think I'm gonna sit and really be patient and watch for if there's any decent setups down here, and then if we do break the 65 mark, it could be a very quick decline. And when I talk very quick decline, we could see 62s. Gold, you said, what's wrong with gold? I don't see what's wrong with gold. Gold is still in the uptrend. Gold, this was a little sideways correction breaking out. Now, also, we are getting the significant end of wave top areas for gold. I think it's going to need some kind of market sell-off to really trigger a pullback in gold. So for long term, it's just in trailing mode. Okay? If you're trying to day trade it, we break above the highs from last Wednesday. Your intraday levels are 27.78, 27.85, and then your next key daily level is 27.91. And then beyond that, you have the cluster right around 28.11 to 28.19 on your next breakout play. Everything's going just fine. Just fine. We're cooling off. It's only going to be a high of 71 degrees today. We have a cold front moving through. A cold front tomorrow morning is supposed to be in the 40s. So we go from 100-degree weather. We hit 100 on Saturday when my sister was here. And now we're going to be in the 40s tomorrow morning. Oh, you gotta love it. Gotta love it still. Hey, and Flagstaff has already had snow in northern Arizona. Flagstaff has already had snow. But, we'll be in the 70s today, low 70s. Everything's going good. It's a little windy this morning. I'm not a big fan of wind. I really don't like wind. Yen, watch where it closes today in relation to 153.56. That would tip the yen continued probability-wise higher for longer and could take it back into the last intervention territory. The major pullback or the minor pullback level right now is 152. Major is right around 150. 50. Euro's interesting. Euro's interesting because we do have a potential mini double bottom, which then I'd start watching for more of a dollar stabilization / pullback if this were triggered. Now, we still have the magnet prices lower in the euro. But in the short term, the only thing that would make me short term watching for a pop against the rotation zone and specifically back to maybe 108.80 would be if that triggers. Other than that, I'm watching for, on any bounces, I'm watching for a continued stronger dollar, lower euro. Bitcoin, I talked about watching for the breakout, continued and really breaking to retest highs. And we had a strong day yesterday, getting above. So we pulled back the daily rotation zone, rotating up really nicely. And now through the next minor harmonic, the next key harmonic, I'm watching 72, 156 area, and then going to possibly new highs in the short term. That's short term only. Spiders. We have a gap down. So on any rally, watch yesterday's close, 580.83. Your very key area, pay attention to Friday's low, 578.08. So 578 is very key. Okay? I'm just flipping these around to see what the short-term tipping point is. 579, 579.50. If we close below there, I'll start watching for, sorry, wrong level. Sorry, 578.25. If we start closing below that, which is roughly right where Friday's lows is, we close below that, I'll start watching for a retest potentially of Wednesday's, the 23rd's lows. They've improved, but they're starting to drop. Not drop net-wise, but they're definitely slowing down. Earnings are slowing down, especially with these quarterly results. And, as I said earlier, have been dumbed down. So the beats aren't as high-quality beats anymore. 490.76 is very key for the longer term on the Qs on any rally. Would be yesterday's close area. And then if we did rally stronger, 498.40 is very key, but we still have a gap left behind on a sell-off to 492.32. So that's my magnet price for any downside price action. NVIDIA, you can still on a daily basis watch 137.46. If AMD really beats, then the next target price upside is 147.11. Why are you trying to sell gold right now, Dark Screen? You wouldn't. The trend is still up on all time frames. There will be a top, but it's not yet. And then we could see a pullback, which could last possibly a couple months. But longer term, it's still it should remain in bullish mode, even with a nice, decent pullback. What else? Tesla. Little drop back into key support. Let's take a look at Alphabet. Now remember, it's still significantly off. its highs. You have an inverse head and shoulders. Okay? So this can be used. Let me do this. This can be used if you're looking for ups. If alphabet beats, this could definitely be used. Let's see where the targets go. Because this is a flat neckline. So here would be your key targets on any beat. If Google does pop up at 178.50, we have a cluster then at 184 and 189. All right, on a big, if it did have a big miss, remember, we still have not invalidated the 62.5 rule from before. So 138.34 would be the target on a big miss. Well, the market's obviously not tired of it. Is there a long-term buy setup? No, not for Tesla. Everything is just in the short term. I just because I lived in a city called the Windy City does not mean I cannot stand the wind. I hate wind. If you're ever wondering, not that you were asking. AMD, by the way, also after the close, really on any bounce up, 174.50 to 187 is the key rollover area where it rolled over before. In order for me to get bullish on anything with AMD, it'd have to get a close after earnings above 187.75. And let's just take a look at the good old Visa. Did not update those levels properly. And of course, I didn't do that properly either. Let's do this from the key October lows. Visa, in the short term, we have a two top area, but overall that's a big triple top. So on any beat, I'd be looking for about 292. And a miss, I'd be looking for down around 270. A big miss, a big beat or big miss. With that, let's just peek in at the markets. S&P, see where the pretty decent drop into the open. So I'll be watching with, all right, negative tick of 1,000 openings. So decently, a lot of selling pressure going in the open. So I'll be watching for some stabilization and on the tick bounce. And then if we roll over, I'll be watching then for potentially the next breakdown play. That's where we stand right now. I hope everyone, by the way, very key if we do consider sell off is, again, Friday's low. It's also the low of the rotation zone and a harmonic. So pay attention to that key level on a continued sell off for today. With that, I shall see everyone tomorrow. Hope you all have a wonderful trading day. Bye for now.